Good morning. I think we can start. Item 1 on the agenda, information papers issued since the last meeting. We've received 2 information papers since the last meeting. Then item 2, date of next meeting and items for discussion. For our regular meeting in April, it will be held on the 13th of April, a Monday. The administration has proposed 2 items for our discussion, namely Securities and Futures Amendment Bill 2015 and updates on the Financial Services Development Council. Any comments? Mr. Wong Kwok Heng? Chairman, I have no particular views on the 2 items to be discussed next time. But I hope that we can have a discussion with the regulatory authorities on the following issue concerning HSBC. There are staff in the senior management of the bank alleged to have been involved in money laundering or assisting in money laundering activities and also tax avoidance activities. And I understand that the UK regulatory authorities are taking action. The HSBC is a note-issuing bank in Hong Kong. And so concerning HSBC Holdings, their involvement in possibly unlawful activities, I wonder if we should hold a meeting to discuss the matter in order to protect the financial security of clients, depositors, and relevant parties. Right? Perhaps I can ask the FSTB to give a response. Right? Item 3. Proposal from the Manpower panel to form a joint subcommittee to study the arrangement of offsetting severance payments and long service payments. The Manpower panel hopes to set up a joint subcommittee with this panel to discuss the issue. So, members, any comments? Mr. Wong Kwok Heng, I support this idea because the matter straddles the work of the 2 panels. Any further comments, Mr. Sin? I also support the idea. All right, if there are no further views, then the subcommittee will be set up. Can the clerk tell us about the present queuing situation? Chairman, the proposed joint subcommittee will deal with policy matters. And under the House Committee, there are 10 such subcommittees under the HC or under relevant panels in operation. And there are 2 subcommittees in the queue. If members want to set up this joint subcommittee, it will be the 3rd on the list, and we believe that perhaps later in the year there will be a slot available for subcommittees queuing up. All right, so we agree that the joint subcommittee be set up. Item 4 on the agenda, second stage of public consultation on establishing an effective resolution regime for financial institutions in Hong Kong. In fact, the administration has provided us with a paper, and I understand that the administration will give us a briefing today.
哦，即係去唔到呢邊。今日好高興呢係。
We'd like to welcome Mr. James Lau and his team. I don't need to introduce Mr. Lau's colleagues to members because members have all got a seating plan. All right, Mr. Lau, please. Thank you, Chairman. We are here to brief members on the second stage of public consultation on establishing an effective resolution regime for financial institutions in Hong Kong. So we will brief members on the outcome of the first public consultation exercise, and then we will be talking about the second consultation. We'll be talking about the safeguards, the funding, and other aspects. So I think I'll need 15 to 20 minutes to highlight the salient points in our paper. Last year, in fact, in the first quarter of 2014, we carried out the first stage of public consultation. There are key elements or key attributes promulgated by the Financial Stability Board. And we need to implement these key attributes in the Hong Kong regime because at the moment the legislation doesn't give us all these powers. And the proposed regime seeks to deal with non-viable, too big to fail financial institutions. In case they become non-viable, we have to make sure that our financial sector can be resilient enough and that there will not be systemic failures. Most respondents felt that there was a need for reforms to enhance local resilience and or cross-border coordination. The IMF in 2014 carried out an assessment, the Financial Sector Assessment Program, or FSAP, and IMF concluded that reforms were needed as Hong Kong was an international financial center. So in the second consultation paper, we seek to report on the views received during the first public consultation, and also there are conclusions, and there are also details on different aspects of the regime, including powers, governance, and safeguards. And for this public consultation, it will end later this month. Or in April. In fact, in 2008, we saw, in 2009, we saw unprecedented use of public money to prevent FIs failing in a number of jurisdictions. So we think that there should be alternatives to bailing in. And so we need to make sure that for critical financial services provided by companies, we need to make sure that they can continue. And then there are these too big to fail FIs. If they fail, there may be contagion effects. And as a result, the stability of the real economy and the wider financial system will be affected. In the past, public money was used to rescue failing FIs, and we now hope that the cost of failure can be imposed on FIs, shareholders, and creditors. And now let me turn to the scope of the proposed regime. There is more or less consensus on the scope in public consultation stage 1. So the regime should cover all AIs, and then FMIs designated to be overseen by HKMA and recognized clearinghouses regulated by the SFC, and local operations of those licensed corporations and insurers which are part of G-SIFI groups. So these will also have to be covered by the regime. And in the second stage of public consultation, we'd like to further consult the public and the industry on the following. First of all, insurers operating in Hong Kong which may pose systemic risks, and then holding companies and affiliated operational entities. Because if a financial institution fails, we may have to go one level up to the holding company level. And then thirdly, exchanges. Should they also be included in the regime?
In terms of governance, in our last report, we've said that for the banking, securities, and insurance sectors, they have their respective regulators. That is the MA, SFC, and the IA. They will continue to be the resolution authorities, RAs. When we have cross-sector groups, that is having banking and insurance business or having banking and securities businesses, then we will have the lead resolution authority, LRA, that will play a coordinating role in the resolution. When an FI fails, just now we have said that there were three types of institutions that would be covered. But it doesn't mean that as soon as they fail, they will automatically be brought into the resolution system. It is only when it fails and it poses threat to the financial stability in a systemic way, then we will trigger off the resolution process. And this is what the FSB has laid down as the criterion. In our consultation document and in the future legislation, we will clearly set out the objectives of using the powers. First of all, we want to protect the critical financial services and financial stability. We want to protect the client assets. We want to protect the policy holders. And we want to protect the depositors, and we want to protect public funds. That is, would like to minimize the amount of public funds used to rescue the FIs. Now, the resolution powers in CP1, we talked about 5 major options and some supporting powers. First of all, when an FI fails or is about to fail, then the first preferred option is to transfer the business to a commercial purchaser. That is, within the same sector, the business will be acquired by another entity. That's a better option. Secondly, within a short period of time, it may not be easy to identify a buyer who is happy with the conditions, and then the business will be transferred to a bridging institution or a bridge institution. So it is to be regarded as an intermediate step. So the bridge institution will hold the assets and continue with the business, and in due course it will be sold. The third option is that if it is impossible to transfer, then we will start a statutory bail-in instead of a bail-out. In other words, the creditors as well as the shareholders must recapitalize the failing FI. And fourthly, the option is such that some of the assets will be transferred to an asset management company or asset management vehicle, AMV. Sometimes the assets may be problematic assets, then usually we will rely on this route. And then the last resort, really the last resort, if we can't resolve the matter within the sector, if we cannot rely on a bail-in, we cannot rely on AMV, then we will have a TPO, temporary public ownership. It means that a public entity, either company or bank, will take over. And then in due course, when the opportunity presents, then the assets will be disposed of or will be resolved. In addition, we need some supporting powers. For the resolution planning, the RA will talk to the FI, and there is a need to review the structure of the FI, and we have to improve the resolvability. In other words, talks must be held to achieve such an objective. The RA will talk to the institutions as to how to deal with it. In the USA, there is a special request to ask the companies to set up a group company so as to make it easier to resolve the subsidiaries. Another supporting power that we are seeking is that once a decision has been made about resolution, well, there may be defaults, and then early termination rights may emerge in relation to the contracts. But then, at the time of resolution, we need to suspend the early termination rights so as to facilitate the resolution. So these are the powers that we would require. For the CP2, we've also talked about the details, like how the bail-in will work. Sometimes certain liabilities have to be excluded or written off, and then to support a bail-in, we need the loss-absorbing capacity. Well, the FSB is still working on the LACB. The talk hasn't been finalized, but then we still want to share the views with you. And then we need a framework to improve the resolvability. And then we have to explore the relationship with the insolvency arrangements. Now a word about the safeguards. Now, in the case of a resolution, we have to compare the scenario with liquidation. We have to make sure that the resolution will be sustainable. As I've mentioned, we want to protect the investors with client assets, depositors and policyholders. And we want to ensure that the financial services will continue. Say you have access to your accounts, you can draw money instead of closing everything down. So we want to see how creditors can take the damage to the value. So we want them to be as less value destructive as possible. The FSB is upholding a very important principle. It's found in the consultation document and has the support of many stakeholders. That is, there should be this safeguard. No creditor worse off than in liquidation. No creditor worse off than in liquidation. In our CP2, we've also got proposals for the idea of an independent valuer, principles for valuation and appeals mechanism. Now, we have talked about 5 options and 2 supporting powers. And since we want to make sure that there will be the NCOOL, so we may have to ask valuers to carry out valuation according to the principles. Lastly, I want to talk about the local landscape. Now, the purpose of resolution is to prevent the use of public funds to rescue the failing FIs. So how are we going to do it? First of all, in the second bullet point, you can see that the resolution mechanism must include a bail-in option. That is, creditors and shareholders must bear the costs. We would also mention that there will be a mechanism to be set up so as to recover any losses incurred in the provision of temporary financing, so that we can recover the temporary financing needed. And there's also one more point here. When we considered how we were to recover the funds, there could be 2 options. First of all, we can do it in advance. We can set up a fund in advance. That's the practice of the EU. But of course, if the fund is inadequate, you have to recover it afterwards. And therefore, in places like the USA, it's more common to see that they're not going to impose a resolution fee in advance. You don't know whether you will be overcharging or undercharging. Therefore, both in Hong Kong and we are following the practice in the USA, it will be collected afterwards. Of course, when we run the resolution mechanism, we'll try as much as possible to avoid having to have exposed levies, and therefore we would like to see that the bail-in will work. Lastly, a word about cross-border resolution. The FSB has mentioned that for the 30 GCB, 29 of them are in Hong Kong, and then 8 of the globally significant important insurers are stationed in Hong Kong. Now, not many FIs having their headquarters in Hong Kong. But then we have 29 global systematically important bank and 8 global systematically important insurer. So to make sure that we maintain our status, it is important for us to provide adequately for cross-border resolutions. Say, for example, if the headquarters is based on a particular place, a decision there may be such that the RA may want to rescue an FI. Sometimes they will rescue the entire group. But usually for the 29 global systematically important bank, they are really huge. And so for the rescue to be done for the entire group, it will cost a lot of money. And therefore, sometimes they may rescue the business of the headquarters of the company, or they will only rescue some local operations. So if they would only rescue part of the business only, say where they have the headquarters, then they may not care too much about the impacts on other jurisdictions. So we need to talk to them, and we have to look at the key attributes. So we need to coordinate. We need to build a consensus so that we can honor our obligations and exercise our rights. Therefore, during the CP1, we found that there was agreement that for the local resolution mechanism, we need to recognize and support the cross-border resolution efforts. So when others are carrying out a resolution, we should be in a position to recognize what they're doing, and we should have the ability to implement.
And we should do all we can locally to support foreign resolution. But then the local RA has to carry out an assessment to make sure that the resolution will deliver outcomes consistent with objectives set for resolution in Hong Kong, and that local creditors will not be disadvantaged. In other words, if the resolution may disadvantage local creditors, then we can choose not to recognize or support the foreign resolution. If necessary, we will make use of the powers under our own resolution mechanism to directly resolve local operations to deliver on local resolution objectives. The public consultation exercise will end on the 20th of April this year. We hope to put forward legislative proposals to the LegCo before the end of this year. Now, according to the FSB, the resolution regime should be up and running by the end of this year. But then a number of issues have yet to be ironed out. For example, TLAC, total loss absorbing capacity. This matter has yet to be decided on by the FSB. And then cross-border coordination. This is an important and yet sensitive issue. And the FSB will have to come up with guidelines on cross-border resolution. And so later this year, there will be a third stage of public consultation on other requirements of the key attributes, and that consultation may be shorter, say lasting for a month or so. We hope that for cross-border as well as local resolutions, they can fulfill the objectives of the resolution regime. Right, 4 minutes, including replies. Wong Kwok Heng, Sin Chung Kai, Leung Sing. Mr. Wong Kwok Heng first. Thank you, Chairman. I want to ask about the powers of resolution powers 1 and 2, the 2 slides. So I understand that there are certain proposed powers concerning the rights of creditors. I want to know what's going to happen to the rights of employees, their salaries, their pay, their MPF payments. So I want to know whether these interests or rights come first among the rights of creditors. And then it is said that there is the NCWOL requirement. And what's going to happen to the rights of the staff, the employees? Look at ATV. There is delayed payment of wages and salaries to staff. And the staff were paid only after the case had gone to court, and then there was reconciliation. So I want to know about the rights of the employees, the staff. And then second, scope. In this second stage, you are proposing to cover more institutions under the resolution regime. I agree. But then concerning local financial institutions, local finance companies, now as many of them in fact are supported by banks. Do you know that people are taking on extra mortgage up to 10 times, 20 times? And so is it that you should intervene in a timely manner? Or else, if these finance companies fail, then there will be contagion effects on the banks behind them. So do you agree that you should intervene in a timely manner? And do you think these finance companies should be included in the resolution regime proposed for Hong Kong? And the Secretary, concerning employees and the staff, I'll invite the HKMA to give a reply. And then concerning the second issue, again, is the HKMA within the HKMA's purview. Ms. Camp.
With regard to employees, we assess that resolution might actually better protect employees in the sense that the essence of resolution is stabilisation and continuity of the business of the financial institution. So to the extent that the business is continued, the employees will continue to be employed and will continue to be paid. Now, if it turns out that the resolution strategy ultimately employed leaves a residual entity that is in fact liquidated, then employees would be covered by the no creditor worse off than in liquidation if they were in the part of the organisation that was actually liquidated. So they would have rights on liquidation, but as the essence of resolution is more continuity, we would hope that the employees would move across with the business and continue to be paid. On the second point on finance companies, the purpose of the regime is to look for financial institutions that could be systemic if they were to fail, so that they would actually, by contagion, etc., cause a problem to financial stability as a whole in Hong Kong. So we consider that all authorised institutions fall within that category, but not so much finance companies, as we're not convinced that finance companies would be systemic in the sense of causing a problem to the entire system were they to fail. For authorised institutions that are deposit-taking institutions and have a lot of depositors, obviously any sudden cessation of the services they provide to depositors could be very disruptive to individuals and to the general payments and financial system in Hong Kong. So we seek to protect that particular angle with covering AIs within the regime.
好，善總嘉怡。
Mr. Sin Chong Kai, I've got one comment and one question. May I refer to the 10th slide, funding? I understand that in the U.S., the levies are raised exposed, so to speak. It's an exposed funding model. So, for an exposed funding model, then the good ones have to pay for the bad ones. But then if it's funding, advance funding, then everybody has to pay. Because if it's an exposed funding model, the institution that has to be rescued may collapse, and as a result, the good ones have to pay. In other words, the good ones have to pay to rescue the bad one. And then you're saying that you want to get creditors and shareholders to bear the cost of failure or resolution. Now, what can you do? Say if there is a bank in Hong Kong, shareholders, say if I buy some shares in the stocks market of that bank, then I am a shareholder. And then creditors, it's simpler. You are requiring them to write off certain debts. But what about the shareholders? Will you raise funds? Will you, on a mandatory basis, require shareholders to contribute to... So I don't know what you mean by requiring shareholders and creditors to bear the cost of failure and resolution. Ms. Camp.
To deal with your comment first with regard to ex-post funding, yes, there's pros and cons either way, and you have identified one of the key cons, if you like, with an ex-post funding mechanism. But then there are also sort of cons with an ex-ante funding mechanism, in the sense that you could build up a large fund that would just sit there as money waiting for something to happen. So we've tried to balance the various comments that we received, and generally speaking, most people favoured an ex-post mechanism. But your point is certainly taken. With regard to costs in resolution, yes, you're right. The creditors would be written off, and the shareholders would be divested of their shares. So I don't think we were thinking of moving outside the scope of limited liability and just making some kind of call on shareholders beyond the commitment that they have as shareholders. But they could be divested of their shares, but should fall into, if there were to be net asset value left such that they would have received something on a liquidation, then they should fall within the NCWOL parameter.
我仲有一個 follow-up 嘅問題咧，其實就同頭先嘅問題有啲唔係。
Now, another question. The eighth slide. The eighth slide. Concerning the new powers. I don't know whether they will be related to the bankruptcy laws. Now, because if you can't rescue the FI, then the FI will go into bankruptcy. So what is going to be the relationship between the proposed powers and the bankruptcy laws? Because under the bankruptcy regime, there are priorities concerning the rights and interests. What if there is bankruptcy after rescue? Who can give an answer? Karen.
The bankruptcy regime will remain in place, and we see resolution as an alternative to the bankruptcy regime in the sense that if the resolution authority decides to resolve the institution, bankruptcy winding up proceedings are preempted while the resolution takes place. But there may be a residual entity. So, for instance, if the chosen resolution strategy were a transfer to a commercial purchaser or a transfer to a bridge, you might take out certain parts of the business, maybe the deposit-taking business and some assets, and transfer those, and you would leave losses and other assets in the residual entity, and then that entity could be wound up. So they kind of sit together as sort of different options for resolving a financial institution. If the financial institution is assessed at the time not to be systemically relevant, so even though it's within scope of the regime, at the time of its non-viability it's not considered to pose a systemic threat, then the normal winding up rules would apply.
好，咁啊，吳亮星議員。
Mr. Leung Sing. Chairman, I want to ask a question in relation to para 6 of the paper. Scope. It says all AIs will be covered. So in other words, all AIs under Cap 155 banking ordinance. And then it is said in the paper that the regime is mainly for too big to fail financial institutions when they become non-viable. Now, in fact, concerning too big to fail financial institutions, and you are proposing to cover all AIs in the resolution regime. And as you are covering all AIs, I think the supervisory and regulatory costs will be very high since all AIs will be covered. And then AIs also will have to incur costs with regard to compliance and other aspects. So can you strike a balance in your regulatory process so that you will only be targeting too big to fail financial institutions for medium-sized to small financial institutions? I hope you will not incur too much regulatory costs.
Mr. Lau or Hong Kong MA?
Yes, thank you. We have thought long and hard about inclusion of all AIs within the regime. Our assessment is that there are some AIs, as you pointed out, that are evidently systemic. But other AIs could be systemic in our view, depending upon the state of the market and confidence, etc., at the relevant time. So our proposal is that all AIs be brought within scope of the regime, and that's in line with international practice in many other jurisdictions. All deposit-taking institutions are within scope, but to cover off the contagion risk. But as Mr. Lau mentioned, resolution itself won't be automatic. At the time that the AI is, in the unlikely event the AI becomes non-viable, at that time a decision will be taken as to whether it poses a systemic threat, and only if it does so would the resolution powers be used. Now, in terms of the implications of being within the scheme, within the scope of the regime, I think that resolution tends to lend itself to proportionality in any event. So one of the obligations of being within scope of the regime may be that you'll have to provide information to the authorities, to the resolution authority, to help the resolution authority with resolution planning for the entity. Now, the information that you have to provide will obviously be substantially greater if you're a very complex, large, too big to fail type institution. If you're a small deposit-taking institution, that information will be less. Similarly, the other main power that will affect before resolution, which I think Mr. Lau also mentioned, is the obligation to take steps maybe to improve resolvability if the resolution planning for the institution has shown that there are some barriers to resolution from the way it is the institution structured. Again, that's much more likely to affect the larger, very complex AIs than the smaller deposit takers. So, thank you.
吳亮星議員就冇第二啲問題啦。
我想問
Mr. Ng, anything else? In terms of governance, I think you have also got this point. That is, the LRA will take the final decision if different RAs cannot make a decision. Now, you're talking about failing FIs. But then before you start the resolution mechanism, you must consult the FS. So I want to know how the two would tally. Will there be a conflict? How are you going to sort this out? Could you like to take this question, Hong Kong MA? Yes, Karen?
係，主席
OK
其實咧嗰度有兩方。
Mr. Chairman, 2 points here. First of all, every RA may trigger the resolution mechanism, may apply the resolution mechanism to a FI. For that matter, the FS must be consulted, and the FS must give approval before embarking on it. Just now, Mr. Ng was referring to another scenario. He thought there might be a conflict, but in fact there won't. Say, for example, we have got 2 RAs or 3 RAs, and then the same FI has business in all 3 sectors. One of them will be the lead RA. The LRA, well, in fact, we are trying to improve it by introducing legislation. Now, there may be certain matters which the RA cannot agree entirely. Then the LRA will not make the final decision. And then, if the LRA thinks that there is a need to do certain things, then as the FSB has said in the key attributes, the RA must have the operational independence. Therefore, if there is a need to trigger the mechanism, yes, the FS has to be consulted, but then for the rest, from then on, the LRA will be responsible. All right, any other questions? No? Then I myself would like to ask some questions. Let's go back to page 10 of your PowerPoint, and you talk about collecting levies. We've already got certain arrangements, say, for example, a protection fund for the insurance policy holders. Now, the purpose is also to provide safeguards in the case of winding up, and we want to provide safeguards. So I wonder if there will be some overlapping. And then you talked about 29 banks and 8 insurers. So who will make the decision? Who will have the final say as to how and when and whether they should be resolved? Are you sort of trying to say who will decide which are being defined as global systematically important? First question may be the colleague from IA, Mr. Chairman. Now, you wondered whether it would conflict or overlap with the protection fund for policyholders. Well, we will make it clear that the levy collected will not be applied to the protection fund for policyholders. So it is an independent levy. Then it's even worse. That means there will be an additional levy. And therefore, in our recommendations, we are saying that we don't want to have an ex-ante arrangement. So quite unlike the one for policyholders, once that's introduced, there will be levy from the outset. Second question, please. Mr. Chairman, for the 30 banks and the 9 insurers, the lists have been drawn up by the FSB members. Of course, they consulted the ISCO and IIS before they came up with a list of SIFIs. Are we represented on the FSB? Yes, indeed. Just a reminder here. Now, of course, it's good to have an arrangement like this, but since the Lehman Brothers incident all over the world, and Hong Kong is no exception. We've tightened up the financial regulatory regimes, and we have got one after another. But you have to bear in mind that everyone will carry with it its own compliance cost. If you continuously introduce such measures, it will only push up the operation costs. Anybody else would like to ask questions? Mr. Ng. Yes, follow up. I must share with you my observation once I've said this. Whenever a regulatory measure is introduced, it will never be withdrawn. After you've given certain powers to the regulatory authorities, I think the FIs have always complained that once you've introduced a certain measure, you will never withdraw it. But sometimes a particular initiative is necessary for a particular period of time. Would you carry out a review so as to abolish those measures that are no longer necessary, so as to drive down the compliance cost? Mr. Lau. Mr. Chairman, of course, Mr. Ng has given certain specific details concerning the regulatory initiatives. Whenever we have international standards being recommended, of course, we take part in the discussion. And for compliance costs, in fact, we have noted the feedback from the industry on various occasions. Hong Kong MA's representative has also said that for the crisis management group, well, for larger companies and smaller companies or medium-sized companies, there is this idea of proportionality. In other words, we don't demand the same amount of information from everybody. And from time to time, we carry out a review. For those that are not necessary or for those which can be streamlined, we do sort them out. Mr. Sin Chung Kai, for the point made in slide number 10, I think I beg to differ from you. Of course, we'll add to the cost of the industry. But then for resolution mechanisms, I think it is all about systemic risk. And then only the too big to fail institutions will be sort of involved. Now, if you have a exposed system, well, after all, we are talking about too big to fail institutions. And then if it is to be exposed, then smaller FIs will share the cost involved. Touch wood, if everything is fine, then everything is fine. But then, if something happens, then if we impose an exposed levy, then the smaller FIs will share a heavier burden. If you do it the other way round, then the larger FIs have to bear the inherent risks. So from this point of view, I would say that the approach should be that of the European one rather than the American one. Now, I think, according to your PowerPoint, I think for the EU it's ex ante, and then, say for example, assuming that we have got a couple of TBTF, and if we have ex ante, before they collapse, before they have to be rescued, they start to share the cost for their risk. Mr. Lau? Yes, if I may give an answer, I think Karen already gave an initial reply. Yes, Mr. Sin's point is valid in that in an ideal situation, it's better to have an ex-ante collection of levies for the purpose of like acting as a reserve. Like the deposit protection scheme, it is ex-ante. We can do it because the banking system is such that we know about the volume of the deposits. But then, say for example, if we are talking about, say for example, sometime in the future we may have a financial crisis, but nobody can tell the size of the money involved, 10 billion, 5 billion or what. So even if we want to build up a reserve, we need to consider many things. Just now, the member said that perhaps the innocent FIs have to share the risk of others. I think it's still a matter of sharing it, whether we do it in advance or afterwards. In Hong Kong, if you want to have the ex-ante levy, you need to collect it, and you have to take part in the operation of the system. And I don't think we've got time to do that, and there will be real difficulty. And therefore, our proposal is different. What do you mean by not having time to do it? Now, if you see that if FI is about to fail, do you think that you don't have time to do it? Assuming that you do your regulatory work properly, whether it's prudence on conduct management, then I think we have always been fine. On one or two occasions, we saw FIs failing. Say, for example, the BCCI, but then Hong Kong wasn't the originating place of the problem. Now, for the DPS, you said that it's easy for that to be accessed. But as to how many FIs we have in Hong Kong, I think you still have an idea. Anything else to add? No. Well, I just want to clarify. I was saying that we should not be setting up regulatory regimes one after another, because the compliance cost will be heavy as a burden, and will also have to be shouldered by the end users. And if there is an overlapping of the costs, we should streamline that.
And then as to whether it should be an ex-ante or an ex-post funding model, I think there are pros and cons for both options. I think it's for the administration to study the two options. But then they are proposing an ex-post funding model. But then for the Policyholders Protection Fund, I think both the elements of both are practiced. Mr. Ng Leung Sing. Yes, Chairman. It is said that the RA can depart from the principle of equal treatment of creditors in the same class in resolution, but only when that departure can be justified against the objectives for resolution. So can you tell us what you mean by justified or justifications? Who is to exercise the judgment as to whether there can be departure from the equal treatment of creditors in the same class? HKMA?
The resolution authority would exercise the judgment, and the general principle was that he would follow the creditor hierarchy and treat creditors in the same level equally. But you might encounter some difficulties, for instance, with regard to, if you take the bail-in as an example, you can't bail in very easily certain types of creditors. So, for instance, derivatives creditors, it might not be easy to ascertain precisely how much is owed, who's owed what, in very short order in order to be able to bail those creditors in. So you might have to take a view that some creditors don't get bailed in, whilst others that are on that level do get bailed in. And then the compensation would have to be made up through the no creditor worse off than in liquidation mechanism.
好嗱，而家根據當局文件呢，佢哋計劃喺2015年年底。
So legislative proposals will be tabled in this council before the end of this year. So do members have any comments concerning this timetable? No? Then thank you very much for coming to our meeting today. Thank you. We'll move on to Item 5 on the agenda now, review of the adjustment mechanism for the minimum and maximum levels of relevant income for MPF mandatory contributions. In fact, the administration has provided us with a discussion paper, and I understand that they will give us a briefing.
好，現在我哋歡迎呢係
I would like to welcome the administration and representatives from the MPFA. I understand that Mr. McShane will give us a PowerPoint presentation. Please complete your presentation within 10 minutes, Mr. McShane.
Thank you, Chairman. We're happy to be able to brief members on the consultation on the review of the mechanism. In fact, Mrs. Yee will take members through the presentation and will answer questions and take members' comments afterwards.
OK。
多謝主席。各位
Thank you, Chairman. Thank you, members. First of all, let me say something about the definition of maximum RI level and minimum RI level. For the maximum RI level, at the moment is $30,000. And employers, employees, and self-employed persons make mandatory contributions capped at 5% of the maximum RI level. And then minimum RI level, $7,100. Employees and self-employed persons are not required to make contributions if the RI is less than the minimum RI level, but employers are still required to contribute 5% of RI for employees. At the moment, there is a statutory adjustment mechanism. The MPFA has to carry out a review at least once every 4 years with regard to the minimum and the maximum RI. These are the statutory reference adjustment factors. Minimum RI level, 50% of the monthly median employment earnings. Maximum RI level, 90th percentile earnings of monthly employment earnings distribution. But then the law doesn't say that only these two factors need to be considered. In other words, the MPFA can consider other factors as well. In fact, there were past adjustments of the minimum and the maximum RI levels. In 2003, the minimum RI level was adjusted to $5,000 based on 50% of median earnings. In 2006, there was a review and the level was maintained at $5,000. Then in 2011, with the launching of the statutory minimum wage, the minimum RI level was adjusted upwards to $6,500 after having made reference to the SMW. And then in 2013, again, in line with the adjustment to the SMW, the minimum RI level was adjusted to $7,100. Maximum RI level there was an adjustment after the review in 2010. And there would be adjustments in 2 stages, 25,000 in 2012 and then 30,000 in 2014. We're now proposing to replace the current statutory mechanism with an automatic mechanism. So the minimum and maximum RI levels will be determined and adjusted at the same time once every 2 years, based on prescribed adjustment benchmarks and mechanisms. We would wish to keep contribution levels aligned with earnings distribution of the working population, and we also hope to enhance administrative efficiency of the MPF system. And for the adjustment benchmark, we propose to adopt 55% of median earnings, in other words, 5% gross up, to relieve the financial burden of low-income earners and to make sure that for low-income earners, they will still get 50% as their take-home pay. And we propose not to include foreign domestic helpers in setting the benchmark for determining the minimum RI level, since their employment terms and conditions are different from those of the local working population and they're not covered by the MPF. And then the amount will be rounded up to the next $100. So there will be automatic adjustment, and the minimum RI level can go up or down depending on the situation. And we've got some figures from the CSD, and they were from the third quarter of 2014. We've of course excluded FDHs. $15,000 times 55%, and that gives the sum $8,250. And as we need to round up to the next $100, so the new level should be $8,300. So according to this mechanism, the minimum RI level will be increased from $7,100 to $8,300. And so we will be talking about 125,000 employees and 11,000 self-employed persons, and they will no longer need to make contributions. The maximum RI level, 90th percentile earnings. This is consistent with the intended coverage of the MPF system. And because of the same rationale, we have excluded foreign domestic helpers in the calculation of the benchmark. There will not be any limit for downward adjustment. But then if there is, or if the 90th percentile earnings increases, then there will only be $5,000 of increase every time. This is to avoid seriously aggravating the financial burden of the business sector and the working population. And the sum will be rounded up to the nearest $2,500. Now let me give members an example. The 90th percentile earnings is $40,000, and if rounded to the nearest 2,500, it's still 40,000. But then the upward adjustment can only be $5,000 at most, and the current level is 30,000, and so the new level should be 35,000. So for both earning $30,000 or more, both employees and self-employed persons, they have to make extra contributions. But the maximum will only be $250 extra. And here we're talking about 342,000 employees and 51,000 self-employed persons. The consultation exercise will end on Thursday. We hope to seek the views of members at this meeting. and we will submit legislative proposals to the government within 2015. All right, questions and answers, 4 minutes, including replies. Andrew Leung, Wong Kwok Heng, and Sin Chung Kai, and also Jeffrey Lam. Mr. Andrew Leung. Thank you, Chairman. I need to declare interest first. I am on the MPFA. Now, concerning an automatic mechanism, I support that minimum. In fact, employers have to still pay the 5%, but employees will benefit. But then for the maximum level, I understand that Chambers of Commerce do have some views concerning the maximum RI level. We don't have any specific comments concerning the minimum RI level. Because for the maximum RI level, I understand that we need to consider the 90th percentile. That's the present arrangement. But then if it's an automatic mechanism, then that means it has to be considered. At the moment, we only need to consider the 90th percentile earnings as one of the factors, but in future that must be considered because the mechanism will be automatic. And also, if the maximum RR level increases, both employers and employees have to pay extra. Do you know that in fact the middle class are finding it difficult to make ends meet nowadays? So I think for the minimum RI level, the proposal can go ahead. But then for the maximum RI level, I think you should further consult Chambers of Commerce and the middle class. Because you are proposing that there should be an automatic adjustment. And I do not want the new mechanism to depart from the original intention of the MPF system. All right, $2,500 as well as $5,000. So have you consulted the middle class income earners? Who can give an answer, Mr. McShane or Ms. Yee? Ms. Yee.
Thank you, Mr. Chairman. I would like to thank Mr. Leung for his comment. Indeed, we have received some comments that share the view of Mr. Leung. But then, on the other hand, we have also got feedback saying that they are in support of having an automatic adjustment mechanism for the maximum RI level so that we can sort of follow the wage level movements. Some employees think that even though they are paying more by way of extra contributions, but then they can save more for future, and also the employer will also pay more, will contribute more. Anything else? Mr. Wong Kwok Heng then. Thank you, Mr. Chairman. A few questions. First of all, for the automatic adjustment mechanism, once every 2 years, why can't you make it once every year? If we are to make it annual, then the lagging behind effect will be minimized. Second question is, well, for the factors to be taken into account, now that you are making it automatic, in other words, the criterion will be set in stone. For the minimum RI, the first one will be the median earnings. For the maximum RI, it will be the 90th percentile earnings. So it will be sort of set in stone. For the statutory minimum wage, we would like to ask for an annual adjustment. We're still fighting for that. But then for the minimum RI levels and maximum RI level, I'm afraid it will make it very difficult to have SMW being adjusted annually. Now we are sort of approaching the end of the consultation period. I want to know whether you have consulted the LAB, Labour Advisory Board. 3 questions. Who will answer the questions? Ms. E. Thank you, Mr. Chairman. Thank you, Mr. Wong, for your comments. For this mechanism, we propose that it should be reviewed once every 2 years. This is because we have to strike a balance between the frequency of the adjustment, that is how close we can follow the economic conditions and the social conditions. On the other hand, every time when there is an adjustment, it means that there will be a cost. Not just the trustees have to adjust their MPF system. Employers that rely on software will also have to make adjustments. So we try to strike a balance between the two. Now, currently, the adjustment is no less than 4 years. Being the frequency in the future, we'd like to make it once every 2 years. As to how often we adjust the MPF contributions and the levels, they are different from the statutory minimum wage. I think both have been provided for clearly in our respective ordinance. So it won't be the case that once we have got our own adjustment frequencies, it will have a bearing on another legislation, or we are barring changes within their regime. The two are separate. As to the LAB, yes, indeed, we have given the paper to the LAB. We have also explained to the Secretariat that we are happy to explain the consultation document to the LAB members. Now, for the 3rd question, in other words, you haven't yet consulted the LAB. You were talking about being willing to talk to the LAB members. We have told the Secretariat. But then your consultation period is going to end. This is an important issue. If you haven't have it talked, if it hasn't been discussed by the LAB, if you haven't got the agreement of the LAB, I don't think you should go ahead hastily. Ms. Yi. Thank you, Mr. Chairman. I said that I've informed them that we'll be happy to explain the paper to them. The Secretariat of the LAB told me that no member has asked for an explanation from us. No one has asked for a briefing from us. As to the views of individual LAB members, we have yet to receive them. I have to put it on record. I strongly request that you must go to the LAB first. Consult the views of the LAB. You must do so because it is a established pool platform for employer-employee relationship. I don't think you can dismiss the idea just by what you have said, because it is like bypassing the LAB. We won't support you if you bypass the LAB. So can you promise that you will certainly consult the LAB? Mr. McShane?
We can't force them to take a briefing from us. We will certainly approach them again and reflect the views that have been rightly made, that their views are important, and to give them a further opportunity. We understand their agenda is, of course, set in advance and quite full, but we'll impress upon them again the need to get their views and to give us an opportunity to brief them. So we will go back to LAB as requested.
Mr. Chairman, I think this is a very important process. It is a matter of procedural justice. This is because all along, whenever there is a matter of concern and of interest to employers and employees, the LAB must be consulted. So the MPFA must make adjustments. You must consult the LAB, have their consent first before you can really revise the legislation smoothly. If you don't do this, if you bypass it, then I must say that I am most unhappy And this is because it's very important. So please indicate once again your position. Don't try to do it half-heartedly.
I can only confirm that we will ask the LAB.
係啦，即係佢都講得好清楚，佢都會翻去考慮啦。
Yes, they made it clear they will go back to reconsider it. I think the administration must have heard the view from Mr. Wong Kok Heng. Yes, please have it minuted. Mr. Sin Chung Kai, LAB. LAB's view is not the same as the LegCo's view. When you want to revise a piece of legislation, at the end of the day, you have to come back to the LegCo. You have my general support on the various recommendations in your document. Now, it is going to be a formula-based adjustment mechanism. You have my support. Adjustment once every 2 years. In the past, usually it was once every 4 years. Now it will be more frequent. That is once every 2 years, and I think it is appropriate. Once every 2 years, sort of more disciplined, more regular. I think that's better than doing it once every 4 years and taking into account the prevailing circumstances. Now, it is going to be a formula-based mechanism. Have it written into the legislation will be good, and we can reduce the dispute between the employers and employees. Well, for the minimum RI level, I don't think it will be controversial. On the other hand, for the maximum RI level, I think it may be controversial. Currently, I'm afraid I cannot tell you what my final position is. Now, objectively speaking, now if you rely on the 90th percentile earnings, you have always been asked to consider the 90th percentile earnings. For many years, you have departed from that. And then the limit magnitude is set to 5,000. In other words, you are sort of suppressing the maximum RI level, so to speak. It's better to have a formula-based approach than not having one. And have it written into the law will be all the more better. This is particularly so when nobody can foretell the ups and downs of our economy. In some cases, employers may gain, and in other scenarios, employees may gain. So have it provided for in the legislation can prevent controversies or disputes when it's time to have it adjusted. I think it is sort of in the form of negative vetting, right? But still you require the approval of the LegCo. For the maximum RI level, I'm afraid I can't agree with you entirely because the 5,000 limit would suppress the maximum RI level. Any response?
Thank you. In relation to the process, yes, we are contemplating a negative vetting process at the end, so there will be that opportunity for override. On the max, we take note of your comments that you think it does suppress. We have tended to get comments on the other side, of course, that they would rather see it suppressed. Some stakeholders would rather see it suppressed than not. But you're perfectly right. It's a matter of the balance and having a mechanism that gets through the inevitable disputes about that every time it comes up. So we'll take your comments into account in relation to that, and that's very helpful. Thank you.
Follow up? No? Mr. Jeffrey Lam. Thank you, Mr. Chairman. For the proposals in the document, we've consulted the business sector as well as the chambers of commerce. Well, for the $5,000 limit, for the minimum RI level, I think we are for it. But then for the maximum RI level, you say that you have to follow the 90th percentile earnings. The views are quite strong. Now you're suggesting an automatic mechanism. That is, once every 2 years, you will be adjusting both the minimum as well as the maximum RI levels. we do not agree. This is because you are determining and adjusting both. But you won't be carrying out any consultation. So without consultation, you can already trigger the mechanism and set about what you want to do. I'm afraid I must have grave reservation. And then you know that in Hong Kong, everybody has strong views about the MPF. Money is handed to you or money is handed to the relevant organizations. The return is low, the cost is high. If we are to hand over more by way of extra contribution, I think to many people it's better to keep the money in our pocket. Yes, you've always been saying that you will ask the relevant organizations to improve their administration, their management, and improve about the rate of return, the cost, etc. But we haven't seen any results, and yet you're asking us to contribute more. The cost is high, return is low, so you haven't instilled any confidence in us. Mr. Chairman, let me seek an explanation from them. When you determine and adjust the levels, are you going to consult the stakeholders? Can you do away with it once the law is passed? And then let them answer again the question, the concern about cost as well as the rate of return. Yes, Mr. McShane.
Thank you, Chairman. Let me try to address the sequence of questions there. The proposal is exactly as you've sort of expressed it as a fear, that the debate is about the mechanism rather than what we do afterwards. So if members were to endorse the proposal, the legislative consequence would be that on the dates as proposed, 2 years, every 2 years, the MPFA would merely act as a functionary. We would look at the relevant figures and then issue a statutory document subject to negative vetting that enacts that. So we would exercise no discretion at that point. We would not second guess the result of that. That having had a mechanism endorsed by the legislators, we would simply be administering that, doing the maths and then publishing the outcome. So the proposal is that in relation to that, we would not be exercising any discretion at that point. We'll be subject to negative vetting and the powers that come with that. In relation to why this is so unrelated to your other issues, we fully accept there are issues about people do not want to contribute more than they feel they need to, but the basic premise of what this Max RI is about is that we do have, for right or wrong, we do have a mandatory system that requires people to contribute over the substance of their earnings. The issue here in the Max is it's accepted as a matter of policy that there should be a point beyond which people shouldn't have to contribute for the whole of their earnings. And so this does go to the question of where in this particular issue should that line be set. Now, generally the consensus when the system was established that should be the 90%. It is true that there have been occasions through the review processes, particularly in the early days, where the 90% was not applied strictly. But the proposal is, as you've suggested, that going forward, if the proposal is accepted, that would be done automatically. We would merely be a functionary. We would not second guess that.
But the paper doesn't say this. You said that there would be consultation, discussion, and because there would be, and then there would be an adjustment. But now here you are proposing an automatic mechanism, and there will be automatic adjustment once every 2 years. So I think there should be this discussion first. I think the discussion should be based on what has been agreed on. I just want to say that my request can be met. Mr. McShane.
Points. But the proposal is exactly that the debate happens now about the mechanism rather than every point in the future, every time this comes up. and that's premised on the assumption we can agree as to what are the right parameters. If we agree those parameters, then it's simply a matter of maths as to what figures we look at, what figure we calculate, and then the process for promulgating that. Having said that, if at the end of the day we can't agree on those parameters, and Mr. Lamb has raised some concerns about it, and we have received some comments from employer groups in relation to that, then if we can't agree on those parameters, then of course we can't move forward with that sort of mechanism. But that is indeed the process. So that is what this consultation is seeking to tease out, to get people's views on, do we have a consensus on what that mechanism is? If we do, then going forward we don't need to have the debate every time we have to do this. As Mrs. Yee said in the introduction, part of the disadvantage of having the debate every time, having a debate is good and it gets people's views and it's current. The disadvantage in this process is that the uncertainty associated with that outcome does have a real cost implication, because people can't automate their systems, they can't get prepared for what's going to happen, because it's always subject to a legislative process. So let me just reiterate that. You're perfectly right. What we are trying to do here with this proposal is, if it's acceptable, to identify what those benchmarks are so that going forward we can just act administratively in that. If ultimately, of course, it's shown in the longer term that this departs from what people think is the reasonable approach having regard to circumstances as they happen, then the mechanism itself could be reviewed again, but that would require a statutory action. But there's always that possibility. So it's not set in stone forever in that sense. But the proposal is yes. Once this mechanism is in place, if we agree it, then we just mechanically apply that going forward.
好啊，我諗政府聽到啊。
Well, I believe the administration has already heard Mr. Jeffrey Lam's suggestion. Mr. James Tian, is there a time limit for each member? 4 minutes. But then just now the member spent 8 minutes.
Firstly, on Chart 4, when we started this mandatory provident fund, from year 2000 to 2011, the maximum had always been 20,000. In fact, Liberal Party had objection on the whole scheme to start off with in those days. We thought that the private organizations also scheme is much better than your suggested MPF. And we were right. Our return is way higher than what government could have achieved so far. So it's not that we're saying that, hey, you did a lousy job. We told you way back in year 2000 that your performance will be worse than the private sector. If we do it by our own company, by the way, we do our also. So forget that part. But anyway, 2001 to 2003, you bump it to 25,000. So for 2 years, the maximum went to 25,000. And right after that, on 2014, you bump it to 30,000. And now you're suggesting maybe under the mechanism, under Chart 9, you want to bump it to 35,000. I would tell you, Liberal Party will oppose this. The reason is simple. For all the SMEs we talk about, or talk to, and the employers we talk to, they all think that money in their own pocket is better invested and have a better return than what MPF have achieved so far. So, what you're suggesting, are you wanting to change the review to once every 2 years? And every 2 years, you have a review. The review is either to stay put or bump it up by 5,000. Maybe that's the first point I want to get clear. If every 2 years you need a review, and the review would end up saying that it remains the same, then I think we can support you. But if you say that every time there's a review, and according to Chart 9, if it achieves the 90th percentile earning calculation that you decide, you automatically bump it by 5,000 at one increment, then we will object. Could you answer that, please?
係馬成瑞先生 ，Yeah, please.
Mr. McShane, please.
How that mechanism works. The proposal in relation to the max is that every 2 years it would be reviewed. We would look at the data, look at that 90th percentile, see where it is. All that the slide Ms. Yee referred to shows the current situation. If we looked at that now, at that 90th percentile is 40,000. So part of the proposal is that there could be an increase to the max could be no more than 5. So if that was the figure when we come to this first review, the 90th percentile is 40, currently 30. The maximum increase would be 5, so it would go to 35.
And 2 years down the road, you'll bump it to 40,000.
Now, 2 years down the road, we'd look at what the figure is again.
If it remains
if the figure was at 40, yes, it would go up another 5 under that mechanism. That's correct.
Thank you, Chairman. Then the explanation is very clear. If that's the case, Liberal Party will oppose to this. We will not agree to reducing it to reviewing every 2 years. Because based on what you're talking about, 2 years, you'll be bumping it from the current 30,000 to 35,000 to 40,000, which we think is totally uncalled for. If you leave the money in the pocket of the employee, let's say he earns 100,000, he could do a much better return by himself, anything that's above 30,000 than you could have done. So simply on that point, we will object. Thank you, Mr. Chairman.
Chairman, can I respond to the return points? There were some comments made about what we have achieved and what the government has achieved. These are totally private managed money. They're totally managed by the same private investment managers as also schemes. They get exactly the same returns for the same amount of risk taken, and that risk is determined by the member in the MPF system, unlike also where quite often it's taken by the structure of the scheme between the promoter and the employer. My point on that is it's often said that the returns MPF are very low returns. Well, that's not necessarily the case. The returns are appropriate given the amount of risk taken, and they're managed by exactly the same people as the also schemes. I should just make that point clear, Chairman.
Okay. Chairman, if that's the case, there's even more reason to object, because they're saying that it's nothing to do with the MPF authority. It's just that the banks, the investment we choose. If that's the case, you could argue in future the return will be equally bad. And I could tell you, in my own company's case, my return for my own employee is much higher than what you could have achieved. Or rather, the MPF's choices of scheme through the different banks and the things that they have achieved. And I would tell you that none of my employees will agree to giving you more money. But anyway, if your review based on the current statistic, if you want to go from 20,000, stay put for 10 years, and all of a sudden 2 years you go to 25,000, and 2 years, by now you're already at 30,000. And in 2014 you want to put up another 5,000, and then if you reduce the review from 4 to 2 years, that means you will go from the current level up 5,000 every 2 years. Will tell you, I don't think the employee will support you. It's nothing to do with us, the employer. Of course, we have to chip in a little bit more, but your return is simply terrible. So anyway, Chairman, this is just a review. You could have the bill into the Legislative Council, and if you could persuade other members to support you, you get it through. We will object. Thank you.
I
believe the administration knows the Liberal Party's views very clearly. Any further questions? No? The MPFA intends to come up with concrete proposals within 2015. I think we can conclude this item. Thank you, government representatives. AOB now? No AOB? The meeting is adjourned. Thank you.